waiting for you to cue us. Good afternoon. I'd like to welcome you all to the November Monetary Policy Statement reading. I'll start with introductions. At the center of your screen and at the center of the table is the Governor, Bank of Uganda, Mr. Michael Atingego. So you're welcome. And on his right is the Executive Director Research, Dr. Adam Mugume. So you're welcome.
Thank you.
And on the Governor's left is the Executive Director Supervision, Mr. David Kalyango. So you're welcome. On my right is Dr. George Sonko, who will later on be the translator for Uganda. And my name is Andrew Elwana, and I am the Acting Director Communications and PR here at Bank of Uganda. In today's program, we shall have the reading of the Monetary Policy Statement by the Governor, and this will be followed by a Q&A session, question and answer session, and lastly, we shall have the translation in Luganda. With that, allow me to invite the Governor, Bank of Uganda, to deliver the Monetary Policy Statement for the month of November. Governor, you're welcome.
Thank you, Andrew. A very good afternoon to our viewers and listeners, and welcome to the reading of the Monetary Policy Statement for the month of November 2025. On 10th November 2025, the Monetary Policy Committee, MPC, of Bank of Uganda maintained the central bank rate, CBR, at 9.75%, reflecting confidence in the improving economic environment while remaining vigilant to persistent risks in the global economy. Inflation has remained subdued, supported by prudent monetary policy, a stronger exchange rate, and favorable energy prices. Over the past 12 months, annual headline inflation averaged 3.6%, while core inflation averaged 3.9%, both remaining below the medium-term target of 5%. In October 2025, year-on-year headline inflation fell to 3.4% from 4% in September 2025, driven by declines in both core and food crops inflation. Core inflation is to 3.4% from 4%, reflecting lower inflation in education, accommodation services, and other goods. Food crop inflation moderated to 6.1% from 7.4%, supported by favorable weather conditions. In contrast, energy, fuel, and utilities inflation rose marginally to 0.1% from minus 0.1% due to slight increases in the prices of liquid fuels. The inflation outlook has been revised slightly downwards relative to the August 2025 forecast. Core inflation is now projected to range between 4% and 4.5%, compared to 4.5% and 4.8% in the previous forecast for financial year 2025/26, which remains below the 5% target over the next 12 months. The revision reflects a more appreciated exchange rate and a supportive external environment amid easing global inflation. The overall outlook remains broadly balanced, shaped by both upside and downside risks. The upside risks include heightened geopolitical tensions that could disrupt the global energy and food supply chains, adverse weather conditions that constrain agricultural output, and exchange rate pressures from weaker capital inflows or delayed oil revenues. Additionally, stronger domestic demand, particularly from public investment, could intensify core inflation pressures. The downside risk includes continued capital inflows related to oil sector developments, favorable weather conditions, enhancing food supply, and easing the global monetary conditions that could lower imported inflation. Overall, the inflation outlook remains balanced, with core inflation expected to remain close to the medium term target. GDP growth reached 6.3% in the financial year 2024/2025, up from 6.1% in the previous year. And this was supported by improvements in agricultural and industrial activities. On the expenditure side, growth was driven by increased consumption and investment. High frequency indicators point to continued confidence in the economic environment in financial year 2025/2026. The economy is projected to expand by between 6.5 and 7% in the financial year 2025/2026, rising to an average of around 8% in the medium term. This reflects Uganda's sustained economic resilience, underpinned by a slight improvement in the global growth, prudent monetary policy, and targeted fiscal measures that have preserved macroeconomic stability and reinforced investor confidence. Growth is further supported by the ongoing implementation of the 10-fold growth strategy, which is unlocking opportunities in agriculture, infrastructure, and extractive industries. Indeed, a major global rating agency recently revised its outlook for Uganda to positive from stable because the economy continues to exhibit stronger momentum compared to her peers. Despite the favorable outlook, several challenges, especially from the global scene, persist. Rising trade barriers, tight global financial conditions, weakened business and consumer confidence, and elevated policy uncertainty could weigh on global and domestic growth. Nevertheless, optimism does remain. Large-scale infrastructure investments and sustained private investment are expected to bolster growth. Faster disinflation and easing global interest rates could also improve the financial conditions and stimulate domestic activity. While risks remain marginally tilted to the downside, the medium-term outlook is positive, with Uganda well positioned to sustain robust growth through strategic reforms, enhanced resilience, and expanding sectoral opportunities. While domestic macroeconomic environment continues to strengthen, the MPC remains cautious on both global and domestic uncertainties that could affect the near term. Consequently, the central bank rate has been maintained at 9.75%. This decision underscores the BOU's commitment to safeguarding price stability and containing inflation while supporting sustainable economic growth in a dynamic macroeconomic environment. The CBR band remains at +/-2 percentage points, with the rediscount and the bank rates set at 3 and 4 percentage points above the CBR respectively, resulting in a rediscount rate of 12.75% and a bank rate of 13.75%. The MPC considers the current CBR level appropriate for maintaining inflation around the medium-term target of 5%, while supporting economic growth and socio-economic transformation. Any future adjustment to the policy rate will be guided by incoming data and continuous assessment of the evolving domestic and global risk environment. That marks the end of the reading of the November 2025 Monetary Policy Statement. Thank you for your kind attention.
Thank you, Governor, for delivering the monetary policy statement for the month of November. The statement will be available on our website at www.bou.or.ug immediately after this press conference. Now we shall head to the question and answer session. I would kindly request that you state your name, the media house that you work for or represent, and we shall allow you to ask your question. In case you're joining us online on Microsoft Teams, on X, on YouTube, please drop your question in the comment section and we shall be able to pick it up. Do we have any questions?
Good afternoon. Eddie Khan is my name from Uganda Media Center and RTV. My question specifically goes to what what are the specific monetary policy tools and liquidity management strategies that BOU has prepared to deploy and try to mitigate the historical tendency that normally happens after the post-elections, which gets into inflationary pressures and steaming to increased government expenditures.
Thank you so much, Eddie Khan.
Okay, Dennis from UBC, and I think all of us have been following up with the developments in the US. I think they are on the 39th day today of the government shutdown. So my question is that given that the US federal government shutdown affects global market confidence and trade flows, what is the specific risk assessment for Uganda's major exports and external financing costs in the shutdown if the shutdown is prolonged? Of course, there's probably a breakthrough expected in the next 24 hours, maybe, but you can still respond to that, Madam Governor.
Thank you so much. We could have one more.
Good afternoon, everyone. Titus Jemba from BBS TV. Governor, regarding the licensing of large circles under the microfinance deposit-taking institutions regulations, what's the BOU's enforcement roadmap, including the timeline for licensing application deadlines and the punitive measures for non-compliant societies? I submit.
Thank you so much. I think let us handle those three, then we shall have another session after that. Thank you. Governor, over to you.
Okay, thank you, Eddie, for your questions. I think the Bank of Uganda has tools to manage liquidity, not only to mop, but also to inject, depending on the circumstances that are prevailing in the money markets. Now, your question is specific to elections. I think any election-related expenditures have been catered for under the 2025/26 budget. So it's all budgeted for, and the financing is clearly stated. Some is coming from domestic revenues. The financing also is being executed through domestic financing, and there's also external financing. This is part of the total financing package. So I cannot attribute that this particular financing is for elections, because we're looking at a budget that covers all government expenditures, including for elections. So it's part of that. All I know is that the budget deficit for 2025/2026 has kind of like increased slightly to about 7%. up from what had been projected at 6.4%. So, in terms of liquidity injections, we don't expect to see any liquidity injections from the central bank to finance government elections because everything is catered for in the budget. And I've just mentioned the way the budget is being financed. Now, of course, the temporary liquidity movement, sometimes you have liquidity injections on account of government expenditures. When government releases its expenditures, is paid through the commercial banks mostly, and because the government accounts are in Bank of Uganda, once you pay out money from Bank of Uganda, you are injecting money into the system. And remember, the money that you are paying out is also part of the domestic revenue collections because all the revenues that are collected come to the Uganda Consumer Fund account. All the revenues that are collected through the issuance of government securities, there's an account where they're held in Bank of Uganda. And any external financing is all held in Bank of Uganda. So when government begins to cut out checks to pay the beneficiaries, there is an injection of liquidity. An injection of liquidity because government is debiting its accounts from Bank of Uganda. Not because Bank of Uganda is printing money. No, it's because government of Uganda is debiting its accounts in Bank of Uganda. An account that has been funded by revenue collections, issuance of government securities, and external financing. Now, depending on how that injection of liquidity affects the liquidity conditions in the market, if it is excessive, Bank of Uganda has its traditional instruments, things like repos, things like the Bank of Uganda bills that can be issued to mop up the liquidity, to bring it to levels that are consistent to delivering an inflation target of 5%. So all I want to assure you is that the financing of the elections has been fully catered for in the budget, and Bank of Uganda liquidity management will just stay the same as it's been to manage any deviations in the liquidity that is being injected on account of government withdrawals from its accounts in Bank of Uganda. Then the other question was to deal with the impact of, sorry, could you repeat it? Was it the impact of the? Right. The latest I've heard about is that I think there's a deal about to be reached. I think they're waiting to vote for it. Once the Washington opens today, they're about to vote for it. But of course, we had anticipated that if the shutdown had continued for a longer time, just like the Fed chair mentioned, that the availability of data to inform the decisions would be a challenge. So since they had planned to have at least 2 interest rate cuts this year, before the close of this year, the absence of this data would have constrained them from taking the next cut. The next cut was done very recently of 25 basis points. So it meant that the next cut then would not be possible in the absence of data. So what would that mean? That the market that had already factored an interest rate cut before the end of the year now would think that that cut may not take place. So that means that the money conditions would be tighter than relatively, how the market did understand, meaning that the US dollar would have become much more stronger than the market had anticipated. And once it becomes stronger, it would have led to a tightening in the financial conditions of the markets world over. It could have also mean that that the exchange rates of most of the emerging and frontier economies would have come under pressure as a result of that. So that's in summary what I would want to say about the shutdown and the possible implications on the global financial markets and its impact on the frontier and emerging markets. There, of course, are other aspects that may be affected. For example, NGO transfers, because if some of these transfers rely on charities and these charities receive some money from the US government treasury and you have a shutdown, that could further lower the NGO transfers going forward. But it looks like a deal is likely to be made, and maybe those concerns might wane out. So that's how I would like to answer your question. Titus, you asked a question about large circles. I will ask David, who's the Executive Director of Supervision, to respond. But before David comes in, let me ask Adam, in case I've missed out anything on the financing, on the liquidity instruments available to deal with the expenditure to elections, and then the impact of the US shutdown on the global financial market, just in case I've missed something.
Governor is asking to add.
David, please.
Thank you. You've asked about the regulation of large circles. Large circles came under regulation and supervision by Bank of Uganda after an amendment of the Microfinance Deposit-Taking Institutions Act. Now, the circles that are considered large are those that have savings of over 1.5 billion and institutional capital of 500 million. So any circle that has that threshold is subject to regulation and supervision of the Bank of Uganda following the amendment of the MDI Act to bring those circles under the responsibility of Bank of Uganda. So the enforcement is already underway, and I'm happy to report that we've so far licensed 3 large circles. Our own statistics, when we did a survey, showed us that there are about 97 candidates for regulation and supervision under Bank of Uganda. Now, those that are that don't meet the threshold fall under the responsibility of Uganda Microfinance Regulatory Authority. So the enforcement is in line with the regulations of registered circles of 2023, and they are published on the website. But enforcement mechanism includes, before I go to enforcement, we are carrying out a sensitization of the public regarding these large circles, and this is jointly with all the key stakeholders that include the Uganda Microfinance Regulatory Authority, Ministry of Finance, Ministry of Trade, and all the other related parties. So this is a joint exercise to try and organize this sector that badly needs these services. Those that are non-compliant, what shall we do? The rules are very clear of enforcement of anyone that becomes non-compliant. And one of the kind of sanctions they impose, they could be legal sanctions, stopping you to take deposits, closure if necessary, but we haven't got to that stage. Right now we are at a stage of making sure everybody is sensitized. There has been a challenge that there's one cooperative society is called Ukusku. This is Uganda Cooperative Savings and Credit Union Limited, that has gone in the press misleading the public, telling them that it is wrong to come under regulation. The law was never passed. But I want to tell you that statements of individuals cannot amend the Act of Parliament. If there's any change in the Act of Parliament, it has to be done within the Parliament, but not by mere announcements. That's the only confusion that we are trying to address. But the Act is still very clear that that responsibility is falling under Bank of Uganda, and all sanctions and enforcement mechanisms are going to be handled in line with the provisions of those regulations. Thank you.
Thank you so much for those responses. We have a couple of more questions that have come to us online. The first one is from Fred Ojambo, who is with the Bloomberg, and he asks, what is the current status and the adequacy of Uganda's foreign exchange reserves in terms of import cover in months? And what is the target by year end? The second one is by Mr. Mwanje David Lusembo, and he asks, what is the success of government bonds? Do we have any other questions in the house? Okay, you can have that one as the last question. Just a minute so that we can hear you. Use the mic.
Yes, my name is Ali Toa from New Vision. A follow-up on the SACCO issue. Last week we did run that story, and today on page 7, the SACCO umbrella body that you talked about came to tell the public that the story was misleading, calling on to SACCOs to comply with the regulation, with the law rather. I don't know whether BOU found the story misleading in any way, because it was derived from the notice, a public notice you put out on the SACCOs to comply and with the BO regulation. Now, I did talk to the head of the union. I just wanted to understand, what's your position for having a single regulator to, manage the SACCO industry, because there are multiple now. We have BOU, of course, and then we have the Register of Cooperative. There's sort of a lot of confusion. So I just wanted to get your view on what you think about having a single regulator. Also, just to add, this matter was before court. So the argument out there is that why the rush to call SACCOs to comply when we still have this case between, of course, BOU and the Ukusku in court. Thank you.
Thank you so much, Ali Twaha. Governor, those are the questions for now. Thank you.
Okay, thank you. I think on the issue of forex reserves, I think we recently issued the State of the Economy report for September, and we did indicate that our reserves were standing at about $5.4 billion, up from about 3.2 or so billion last year. And this has been made possible because Bank of Uganda has been very innovative, proactive in building up reserves using all the tools available, including purchase from the interbank foreign exchange market. In terms of the month of import coverage, here we talk about future month of import cover. I think we're now close to 4 months of import cover. I think we're just shy of 4 months. But of course, we have the EAC target of about 4.5 months of import cover. And market conditions permitting, we will build reserves to that level of 4.5 months. And also we are aware that there are vulnerabilities, there are risks in the horizon, given what's happening in the global environment. So to the extent that the market conditions permit us, and to the extent that we inject liquidity that we can manage sufficiently, we will continue building reserves. And let's mark that last point. When you buy dollars from the market, you are injecting Uganda shillings into the market. Now you need to strike a balance between the increase in the shillings in the market with the reserve that you're building. You should be able to manage the liquidity that is resulting from the purchase of foreign currency reserves. And so far we have the tools to deal with that. So how much shall we build in the future? It will depend on two factors: the market conditions and our capacity to manage the resultant liquidity. And then the success of the government bonds. I think the success of the government bonds have been I mean, I would say they're successful because in almost every auction we have, it's oversubscribed. So to me, I don't know any other measure of success if you are having persistently oversubscribed auctions. So that's how I would like to call success in the government treasury bonds. Adam, you want to add something? Okay. David, you take the question of that has been asked by Ali, and if need be, I will add something.
Okay, you've asked a question as to whether or not a single regulator would be appropriate. A single regulator is appropriate only when you depend on the nature of business. These cooperatives, when they are small, their behavior is different. But as they grow big, from the financial sector perspective, they tend to affect the stability of the financial system. Their behavior becomes systemic. I want you to consider a cooperative of which has deposits over 32 billion. If that went down from a regulator's perspective, it can distort the sector. And so even the choice for them to come under Bank of Uganda was unanimously agreed to by Parliament, reasoning that it has financial stability implications if they are left unregulated. This one, people may be incensed with having to have one regulator, but the aspect of stability is given prime consideration. There is the aspect of systemic risk. When it grows again so big, it becomes systemic, the interconnectedness, they are accessing funds from commercial banks. If they went down, they can easily cause a challenge. So the risks are quite many if you look at the size. So the choice of whether one regulator or not, it also depends on the characteristics of the business that we are doing. So I would, and that decision actually was arrived at in the Parliament, and they gave Bank of Uganda full responsibility over the big ones, not the small ones. So all those that are 1.5 and above, and institutional capital 500, they come under the central bank. We have supervised and regulated the cooperative banker before. It served this economy. So, there was a cooperative act. So because of the sophisticated nature of its business, when it gets so complex, then it can be assigned an appropriate regulator. In this specific one, the nature of the transactions and their size requires that Bank of Uganda takes the lead. Now, I want to get back to the question of who is telling what. When the act was amended to bring registered societies to Bank of Uganda, some corporators, some members of the union sued the Bank of Uganda in the High Court. There's the case number 0391. I'm sorry, I'm not so schooled in law, but there are numbers here. There's miscellaneous application number 0391 of 24, arising from a civil suit number 130 of 24. They sued the bank, I think with the government, and the petition was dismissed. I have it here, a copy of here, and the application here is accordingly dismissed with the costs in the cause. It is still maintained that Bank of Uganda should continue supervising in the form that had been approved by the Act of Parliament. So if to say that when you look at the media advertisement telling them not to comply, I think it is misleading. They even said it's a pending case, yet the case is here was what? Maybe it was taken to another court, I don't know. But here it is a High Court, and a copy of which we have, dismissing that very petition, meaning that nothing has changed. The act still stands. It was never expunged. So that's where we are at. We have a responsibility to behave in line with the rules and regulations as portrayed in the MDI Act and Regulations of Registered Societies 2023. Thank you very much.
Thank you so much, Governor and Executive Director Supervision. We just have two more questions. And from Elias Biavarema, he asks, since the start of the gold purchase program, how much gold has been purchased so far in terms of tonnage and monetary value, and what percentage of Uganda's international reserves is now held in gold? Also, second one is Standard Chartered's divestment of its wealth and retail banking to ABSA is a strategic shift. What is BOU's assessment of the immediate impact on the banking sector, on the competition and financial stability, and the efficiency of the monetary policy transmission mechanism? Thank you.
All right, thank you. I'll ask Adam this time to respond to the gold issue. You haven't spoken since. And then for the Chartered again, I'll ask David to respond. Then in terms of the model policy transmission, we can share that. Adam?
I think it was Vidiavarema. He said, no, we purchase, that we started the gold purchase. No, we haven't started. We have been in preparation. And I think we did put up an advert, which was responded to by potential gold suppliers. Now we are at the stage of negotiating the terms of the supplying the gold to BOU, and also making sure that we follow the all the required documentation, including the source of the gold, etc. So in brief, we haven't started the gold purchase per se. We are just in the process of starting the process. Thank you, Governor.
Thank you very much. As pointed out, that the sale of Standard Chartered retail and wealth banking units were a strategic decision. Indeed, it is true, it was a strategic decision. But this transaction does not mean Standard Chartered is exiting the industry. So they are transferring only the retail and wealth business units to ABSA once we have approved as a regulator. And then they are going to retain the corporate and institutional banking business. So how does that impact, how does this transaction therefore impact on competition? The banks still remain the same. What has changed is that assets have moved or are going to move from one institution to another, but within the same banking industry. So we are going to see a robust competitive regime, but the way competition has evolved in this banking system, we shall see those that are digital advanced being more competitive than those that don't have the digital instruments. So competition will not be that much impacted, to still remain because of that arrangement, since they are retaining some segments of the sector of the business. So if it is not an exit as such. Now, in terms of impact on financial stability thrives a lot on financial soundness of the institutions that we manage. Most of the institutions that we are referring to, we already financially sound, as in they are well capitalized, they have good asset quality, they have adequate liquidity buffers, the funding arrangements are appropriate. And so these are sound from one sound institution to another. The impact on stability negatively is not likely to be something that will crystallize, because they are from a strong foundation of growth. In terms of monetary policy transmission, which my colleague has talked about, this one also thrives on healthy interbank markets, sound institutions. So nothing has changed about the health of these institutions. So transmission, I don't think will be that impacted in a way adversely because of this transaction. From one sound institution to another, and all these are still sound. And generally the sector is sound. For effective monetary policy transmission, you need sound institutions, good infrastructure, and the healthy interbank market, which are all in place. I think that is all. That's all I can say about this transaction. Thank you.
Thank you so much, Governor, and the executive members present here. I'd like to thank the members of the public, the media, and all who have joined us today for this press conference. The transcript for the Q&A session will be made available as well on our website for those who would be interested in what has transpired in the Q&A. We will now have a 2-minute break, after which we shall have a Luganda translation. On behalf of the governor and his team, we'd like to thank you very much and wish you a good afternoon. Thank you.
Okay, when we are ready, we'll go. Are we ready? Alipoota ya gavana ekwata ku byensimbi mu mwezi gwa Museenene 2025 ng'ennaku z'omwezi 10 omwezi ogwa Museenene 2025 akakiiko ak'ebyensimbi mu banka enkulu ya Uganda kasazeewo kasigaze amagoba banka ez'ebyobusuubuzi zegeewolerako okuva mu banka enkulu ya Uganda ke twakazaako Central Bank Rate ku bitundu 9.75 buli 100 nga kino kyolese ebyenfuna bya Uganda ebyeyongedde okwenywereza ddala ate n'okuba nti nabo batunuliddeko ddala n'ebyo ebiri mu byenfuna okutwala mu nsi yonna. Gavana anokoddeyo nti okutwaliza wamu enkyukakyuka y'omuwendo gy'ebintu yeeyongedde okukkakanira ddala mu myezi 12 egiyise era ng'eri ku bitundu 3.6 buli 100 nga kino kyesigamiziddwa kuba nti essiringi ya Uganda bw'ogigeraageranya ne dola ya Amerika yeeyongedde okwenyweza awamu n'amafuta amafuta n'amasannyalaze okuba nti n'emiwendo gyago gibadde mirundi ddala. Era gavana n'anokolayo nti mu myezi 12 egiyise nga tutunulidde omwezi gw'okumi ogwa Oktoba ogw'omwaka guno okutwaliza awamu enkyukakyuka y'emiwendo gy'ebintu yali ku bitundu 3.4 buli 100 ng'eyo eri ddala wansi bw'ogigeraageranya n'ebitundu 5 buli 100 banka enkulu ya Uganda byesinga okutunulira. era gavana anokoddeyo n'agamba nti okuteebereza kw'enkyukakyuka y'emiwendo gy'ebintu bw'okugeraageranya ogw'omwezi guno ogw'e11 n'omwezi ogw'omunana 2025 tulabira ddala nga okuteebereza okwo kweyongeredde ddala okukka era nga kati tusuubira nti myezi 12 egijja mu maaso enkyukakyuka y'emiwendo gy'ebintu ejja kuba wakati w'ebitundu 4 n'ebitundu 5 buli 100 mu mwaka guno ogw'ebyensimbi 2025-2026 ng'era ekyo kiragira ddala nti ekyali wansi bw'ogigeraageranya ne bitundu 5 buli 100 banka enkulu eya Uganda byetunulira bulijjo era ng'ekyo kyesigamiziddwa kubanga siringi ya Uganda yeyongeredde ddala okwenyweza bw'ogigeraageranya ku dola awamu n'okuba nti ebyenfuna mu mawanga ge tusuubulagana nabyo bigenze bikkirira ddala bigenze birongooka olw'okuba nti enkyukakyuka y'emiwendo gy'ebintu oba omuzungu kyayita inflation mu mawanga ago nayo yeeyongedde okulongooka. Gavana n'anokolayo nti okutwaliza wamu wadde ng'ogwo guli gutyo anokoddeyo ensonga ezisobola okulobera inflation eyo obutabeera weeri. Anokoddeyo ensonga ez'obusambattuko obuli mu mawanga agatwetoolodde n'aleeta nti ekyo kiyinza okukosa emiwendo gy'emmere awamu n'amafuta ne kireeta obuzibu. N'ayogerayo nti singa n'embeera y'obudde eba etabanguse ekyo kiyinza okukosa ebyobulimi. N'anokolayo nti okutwaliza wamu singa ne siringi ya Uganda eyegeera n'enaabuuka ng'ogigeraageranyiza n'ez'amawanga amalala nga kyesigamiziddwa ku kuba nti singa dola ze tusuubira okuva mu mawanga amalala tezijja oba n'ez'amafuta tetusuubira nga tuyikudde amafuta kyo nakyo kiyinza okukosaamu mu ngeri eyo. N'alambulula nti ekirala nti singa bannayuganda beeyongera okusaasaanya ssente kyo nakyo kiyinza okwongera mu lufutifuti kye tuyita inflationary pressures. N'alaga nti naye ne inflation eyo esobola okweyongerera ddala okukka ku bitundu 4 n'obutundu 5 buli 100 we tugiteebereza okubeera mu myaka gw'ebyensimbi 2025-2026 singa ssente zigenda okweyongera mu kuyiikula amafuta nazo zeeyongera emmere eyongera katale olw'embeera y'obudde awamu ne inflation okuva mu mawanga amalala yeeyongera okukka ekyo nakyo kijja tuyamba. Gavana n'akoonako ku byenkulaakulana by'eggwanga n'alaga nti omwaka gw'ebyensimbi oguwedde 2025-2026 twakulira ku bitundu 6 n'obutundu 3 buli 100 okuva ku bitundu 6 n'akatundu kamu buli 100 mu mwaka gw'ebyensimbi 2023-2024 era n'akuba ttooki maaso n'alaga nti okutwaliza awamu mwaka gw'ebyensimbi 2025-2026 tusuubira okukula ku bitundu wakati w'ebitundu 6 n'obutundu 5 buli 100 paka ku bitundu 7 buli 100. N'ayongera n'alambula nti myaka ng'esatu mu maaso tujja kuba tubuukira waggulu ng'ejjanzi nga tukulira ku bitundu 8 buli 100. Gavana n'alambulula nti okusinziira kw'ezo ensonga n'okwenyeza kw'ebyenfuna by'eggwanga akakiiko aka Monetary Policy Committee oba akateekerateekera ebyensimbi mu ggwanga kasazeewo okusigaza Central Bank Rate oba amagoba banka ez'ebyobusuubuzi zegolerako okuva mu banka enkulu ya Uganda ku bitundu 9 n'obutundu 75 buli 100. Gavana n'ayongera okuttaanya nti enkola eyo ejja kweyongera okuyamba banka enkulu eya Uganda okulaba ng'etuukiriza ekirubirwa kyayo ekyenkyukakyuka gy'ebintu okusigala ku bitundu 5 buli 100 oba wansiko neyeeyongera okuteeka ebbugumu mu byenfuna n'okuwagira enkyukakyuka mu byenfuna okutwaliza awamu. N'ayongera nti akabonero aka ka Central Bank Rate kajja oba enkyukakyuka yaako yonna mu maaso mu myezi egijja mu maaso ejja kusinziira mu bwino anaaba avudde mu kunoonyereza ku byenfuna awamu n'engeri gye tunaaba tusengeseemu ebyenfuna n'enkyukakyuka mu mbeera y'ebyenfuna mu nsi yonna. Bw'atyo gavana n'ateekako omukono. Mwebale. No questions? Good.